Good afternoon. It's 2 p.m. and we are sitting at a breezy 14 degrees Celsius here in Babane, Eswatini. Partly cloudy skies with a gentle breeze, perfect conditions for staying sharp as well as informed. Coming up on today's ERS Tax Talk Market View, what every taxpayer in Eswatini needs to know right now. The Eswatini Revenue Service is ramping up for the 2025 tax filing season. And today we go beyond the basics, from who must file to how penalties will apply if you do not use the Tax Ease platform. Deadlines, payment methods, and the tax rates that affect you and your business, all decoded here. Joining us live in studio will be Nkosi Mahlalela, the Manager for Taxpayer Education and Information, as well as Ndutuzo Dlamini, Manager, Marketing and Communications. So you do want to stay with us because compliance is not optional, but confusion doesn't have to be either. That's coming up next right here on Market View. But first, we are going to cross over to our new family in Mozambique, where the Eswatini Tourism Authority is making some interesting developments there that is going to happen after this bumper. All right, August is a fully loaded month for Eswatini. It is buzzing with vibrant cultural as well as economic events like the iconic Umhlanga Reed Dance, which has just been royally announced a few days ago. The trade fair, as well as a couple of more activities that happen in the Kingdom of Eswatini. The Eswatini Tourism Authority, the ETA, is seizing every opportunity to spotlight the Kingdom's must-see attractions, as well as to boost tourism across the region. Now, as part of their international push, the ETA team is currently in Maputo, Mozambique. Our new family, if you like. They are rolling out an exciting activation event that is designed to promote Eswatini as a top travel destination and, in turn, fuel the nation's economy, more importantly. We are now joined by Chungi Dlamini, the Head of Marketing at Eswatini Tourism Authority, to speak to us more about the event. Chungi, very good afternoon to you. Hope that you're having a lovely stay there in Mozambique. They are our family now, and I hope that you are walking with a sense of pride as you walk the hallways there. You know, an interesting development that is happening there. If you will, just give us a highlight of some of the events that are happening there and what it is that you want to achieve.
Good afternoon, Sfiso. We are coming to you live from Maputo Cardoso Hotel. It's okay. Can you hear me? Okay. You from Maputo Cardoso Hotel. So with the Tourism Authority, basically we came here just to activate the events calendar. As we all know that the month of August, basically it's a genesis and the peak season where in the tourism industry we expect an influx of tourists coming into the country. As we know that nationally there is a list of anticipated hive of social activities which include the famous Reed Dance, the International Trade Fair, Imbube Marathon in October, the Swazi Rally, Campfire Festival, the Farmers Market. As we all know that the Hypnotic is back. So we're quite excited by these events because these events, so they put the bums into the beds. As you know that we're affected by the Trump order, so which means we do not have much tourists into the country in terms of conferencing, so which means hotels are empty, and we're quite hopeful that now, because we have this hive of activities which will happen between the month of August, September, and October, we are hoping that we're going to receive a quite number of tourists that are going to come into the kingdom.
We know that Mozambique is part of the Triland initiative that was kick-started a couple of years ago. And, you know, it's just beautiful seeing how you are intentional about deepening the connections, especially now that there are our new in-laws across the border, that beautiful country that is Mozambique. I wonder, as you mentioned, all these events that will be happening around this time, how much of you know, what you can leverage will benefit or will contribute to the ambition that you have as the tourism sector in Eswatini of having, you will tell us the number, I believe it's 2 million visitors a year?
The target is to reach 2 million visitors by 2027 with a 2 billion emalangeni in terms of tourism receipts. Also increase the average length of stay from 1 night to 3 nights.
You know, what's the reception like, you know, as you conversate with the people from Mozambique. I know some of them have been to Eswatini before. Some of them will be new visitors. How excited are they for this season, as well as for other seasons that will be coming in Eswatini?
Okay, thank you, Sfi. So Mozambique remains the pillar of our tourism industry. For this reason, it is imperative for the ETA to consistently visit Mozambique year in, year out. As you know, that we have a tripartite agreement between Mozambique, Mpumalanga, and South Africa, and Eswatini, to strengthen the ties and collaborations in terms of marketing efforts, because you cannot just promote your destination on your own. So you need a partner so that we can package this destination collectively. So Mozambique remains a source market after South Africa. So for us, if our people are coming mostly from Mozambique, it is imperative for us to come and actually activate, because we know that the things that brings people into the country is mostly events. They don't come just for hotels, but they come for events or something to do in the kingdom. So it's important for us to come and reignite that fire to say Eswatini is still open for business. Eswatini is a country that is open for people to come and visit. We are hopeful, so that after these 3 months, a number of people coming into the country, so that we can be able to reach our target of 2020 by 2027, 2 million visitors and 2 billion receipts.
Chungi, thank you so much for your time. We hope that you are going to achieve every aspiration that you left Eswatini hoping to achieve in Mozambique, our new in-laws across the border. And of course, we are not going to be, remiss and divorce the beautiful developments that we have been seeing His Majesty King Mswati III pushing in the energy sector with Mozambique. We hope that comes to fruition very soon as well. That is Chungi Dlamini from the Eswatini Tourism Authority. Let's go for a net break. We'll be back shortly.
Hi, I'm Alex. Here's a riddle for you. What can you own but never hold? Let me show you. Welcome to cyberspace, home to a lot of the things that we use in our daily lives. Games, videos, and so much of our data. But also, here it is, crypto assets. You've probably heard of a few, maybe Bitcoin, Ether, or others. So what am I driving at here? After the global financial crisis, trust in banks was at an all-time low. Crypto assets were created as an alternative way to make payments, democratizing and decentralizing finance. Basically taking power away from banks and putting it in the hands of the people. The idea was that they were going to fundamentally change the world of finance with their decentralized ledger technology, the blockchain. So, what's the catch? Without backing assets or a central authority, crypto assets seem to be really volatile. That's great if you want to gamble, not so great if you want to pay for something. Because how can you really pay for something with an asset that isn't a stable store of value? Enter the stablecoin. A crypto asset built on the blockchain, but usually with a centralized issuer. While the value of crypto assets like Bitcoin is determined by supply and demand, stablecoins aim to have value by being pegged to another asset in one of two ways. The first is by backing the stablecoin with another asset, like the dollar, the euro, or even a commodity like gold. In theory, keeping a one-to-one parity. But wait a minute, doesn't this go against the founding premise of crypto? Maybe, but it also allows users to stay in the crypto universe without all the volatility. The second way stablecoins try to maintain value is through an algorithm, a formula that automatically raises and lowers the total number of a given asset in response to supply and demand to keep the price at or near par. One danger with stablecoins is market shocks. If prices begin to fall too quickly, or users lose faith in the ability of the stablecoin to keep its desired pace, everyone could try to sell their stablecoins all at once, dropping their value almost overnight. There are a few famous examples of stablecoins that have crashed over the years. Some people lost all their savings after relying on something they believed had a fixed value. So, is this the end of the stablecoin story? We can't really be sure. Some still see the promise. They think that stablecoins have the potential to increase access to financial services and become a viable payment method. But for that to happen, there needs to be regulation to prevent fraud and crashes and to protect users from abuse. Before imposing regulation, authorities will look at how people are actually using stablecoins, whether it's for payments or something else. Some authorities are looking to regulate the bigger stablecoins the way they do banks and other traditional financial institutions. Now, here's the real riddle. If these stablecoins are regulated like banks, don't they end up becoming the banks that crypto assets were meant to replace?
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back, and thank you so much for staying with us here on ERS Tax Talk. Today, we bring you essential updates from the Eswatini Revenue Service that is regarding the 2025 tax filing season. And of course, these updates affect individuals, they affect businesses, they affect special taxpayer groups alike. And today's session is a continuation from last week's discussion where the two people that are seated right next to me were speaking to my colleague, Notsile Sitole. But today we ask who should file, what is voluntary compliance, and what strategies has the ERS put in place to ensure consistent communication with their clients. But also, how does ERS ensure clients are treated fairly how they are treated fairly with, I beg your pardon. With me in studio, I have the right people to talk to. I have Manager Taxpayer Education and Information, Kabolen Kosi, as well as Manager for Marketing and Communications, Nduduzo. And perhaps, if you will allow me, you two, I'll start with you, Kebo. I want to understand the prescribed manner of submitting returns.
Thank you very much for the question, and I'd like to greet the viewers at home. So the prescribed manner of filing your returns this year, 2025, is through our new platform. We call it TaxEase. It is a self-service platform for our clients where they can file or do everything tax. So we encourage our clients to use the platform. Any other manner or any other mode of submission, unfortunately, is not acceptable this year, which is your manual and all other means. So we encourage our clients to use TaxEase. Otherwise, any other manner might even attract penalties because it will be viewed as invalid and it will be as if you haven't filed at all. But of course, we are available to assist our clients on how to go about.
I know tax rates are always different. What are the prevailing tax rates right now, Nduduzo?
All right. Thanks, Fiso, and good afternoon to you and the viewers. So I think that there are two applicable tax rates which we are going with for this season. So firstly, it's the corporate income tax for 2025, where it's going to be 25% after profit. So any corporate after profit, we are expecting 25% that you pay us 25% of that. And then secondly, we have what we call presumptive tax, where we take small businesses from 0 to 500,000. That's where they fall in. And then as part of those, we are expecting them to be able to pay 1.75% of their turnover. but we break it down so we know that from the presumptive tax, we've got 0 to 500,000, where we don't charge them, where we are charging them at 0%, and then anyone above 50,000 to 500,000, that's where they pay the 1.75%.
Yeah. And we come back to you, Cebo. Now, you highlighted something critical, the innovation, the development, the Tax East platform, which I suppose sort of puts a responsibility to your clients not to complain about queues anymore. The responsibility is literally on their hands. Now everybody has a digital device. What are the critical deadlines for submissions as well as payment?
Okay, would like to please applaud our clients to request that they mark these critical deadlines in their calendar. So for this year, any non-individual entities, which is businesses, which could be VAT registered entities or non-VAT registered, their deadline for submitting their income tax 2025 is 31 October 2025. And then for all individuals, that could be an individual who's earning above 3 million this year, 2025, as well as an individual with multiple sources of income, as well as individuals under the high net worth individual structure. We expect them to file on or before the 30th of November this year. And then for all taxpayers who are registered within the presumptive tax regime, their deadline this year to file their income tax 2025 is 31 October 2025. Yes.
I really hope in the next few years I'll be amongst the people that are expected to pay by the 30th of November.
Oh.
I believe I can be that person. 3 million a year.
3 million and above.
Sounds achievable for me. I don't know about you guys.
Mm-hmm.
Anyway, Dutuzo, coming back to you. Acceptable payment methods. I know there's different methods, right?
Yeah. So for us, it's quite easy. I think the first thing what we do is we take EFT.
Right.
And then from there, if you are visiting our service centers, we can also take speed points where you can use your cards or debit cards to pay. You can use mobile money, which is also part of our payment methods. And then lastly, is that maybe just to caution is that when you do visit us, please make sure that you don't bring cash, as we don't take cash as part of the payments which we have in our service stations. But lastly, what I would do and also encourage people is that they should visit our websites so that they do get the correct banking details and not find themselves sending money or being frauded with people saying this is the banking details. So with that, they can just visit our website to get the correct banking details.
Okay. Perhaps as we cap off our interview, Cebo, the buzzword pay and file and pay. What is that, and what can you say about it?
Okay. When we say file and pay, really we request our clients to ensure that they file their returns and they make whatever payment that's supposed to be paid against their returns on time. Not just filing and paying. For us, over and above the buzzword being file and pay is the on time. And so before you do that, would like to remind our clients to please ensure that their returns are correct and they are complete. And we are available. Actually, even before you do that, you can visit us just to ensure that everything is in order. You touched on gadgets and technology and all that. We'd also like to remind our clients that even in all our service centers, even if you don't have a computer or connectivity, you can still visit our service centers across the country. We have provided kiosks where you can even do your filing there. Yeah. So file and pay for us is also doing it on time, which is very important.
Yeah.
Yes.
Well, thank you to the both of you for this insightful conversation. We hope that the viewers at home are listening and that they understand that the onus is now on you. They've done their part. They are here. They're disseminating the information. They've created platforms for you that make it easy for you. So the responsibility is on you now. Let's go for a net break. We have Senator Sbia on standby for our market analysis.
Hi, I'm Golda. I work here at the IMF. Our aim is to provide the best possible advice on economic policy to our member countries, helping them to create conditions so everyone prospers from economic growth. One question our economists are always getting: how can we reduce poverty and foster inclusive growth? There are a few ways to think about it. Some say the government should be heavily involved in the economy, with regulations to keep people safe and high taxes that fund and support a healthy, well-educated and inclusive society, even if it's at the expense of higher growth. Others believe that the government should have little or no part to play in the economy. Lower taxation means more money in everyone's pockets. More individual freedom, they say, means more economic growth overall. But maybe there's a target we all could be shooting for: the best policies on inclusion and growth. Essentially, inclusive growth is about making the economic pie bigger and sharing those slices more widely. So, how do we get there? By aiming for a middle ground. Both sides mostly recognize the need for social safety nets, public pensions, unemployment insurance, food programs. These measures prevent extreme poverty and provide a basic standard of living. At the IMF, inclusive growth is central to our work because reducing poverty is in everyone's interest. Part of having a free and equitable society is ensuring we all benefit from its growth, no matter who we are. And it's not just about creating a fair and equal chance to succeed for individuals, regions, or countries. It's about distributing growth fairly for future generations too. Overall, inclusive growth is based on the idea that wealth creation, economic freedom, and equal opportunity can and should coexist.
All right, our market analysis now is 22 minutes after 2. Thank you so much for staying with us here on ERS Tech Talk. We have Sanellis Bia, who joins us virtually to help us understand this ticking point toward a trade flashpoint with the Trump's trade tariff deadline, I beg your pardon. Sanele, a summary. I'm looking at the time, very little time. If you will, just give us a summary. I'm seeing everything is on the green, some marginal increases there. What is at play?
Thank you, Mr. Nxumalo, and good afternoon to the viewer. So what investors are looking at right now is the beautiful earnings season that we're seeing across the globe. You know, companies are posting very good earnings regardless of the uncertainty that the Trump presidency with its tariffs actually brought onto the markets. And one thing that we are noting, Mr. Nxumalo, is right now we are moving into this tariff row, but most of the major trading partners of the U.S. have already have deals on the table. So right now there's a bit of more clarity in terms of how the US is going to trade with the US, with the EU and Japan and China. We're just waiting on that deal to come through with India. It's only just Canada, but we do know that there is that North American trade agreement that the US would have to tear up first before they go against Canada full force. But right now, markets are a bit stable because there is a bit of clarity. And we do know that what we expected was going to have a huge impact on the markets was actually going to be those semiconductor chip imports into the US. But what we see President Trump do, what we saw him do last night was actually he's just coming to say, I'm going to impose 100% chip imports, but on those that are not producing in the US. But now we do know that the likes of Apple, NVIDIA, and quite a number of these tech companies do have their final stage of production in the US. So now markets are a bit relieved on that. So we saw the NASDAQ composite, which is tech heavy, gaining some 252 points, and the Dow Jones Industrial Average gaining some 41 points, with the S&P 500 also gaining some 45 points, staying at that 63,445 type of region. This is also being fueled by the fact that we are expecting, the Feds to cut interest rates in September. And then when you move into Europe, Germany and France are gained in this background of this deal because again there is clarity, but we do see Germany fails to go back to that 25,000 mark, still staying steady there at the 24,288. That's because there is a framework right now between Europe and the US. There's still quite a number of other issues that need to be tied up in terms of the commodities, more especially those automobile parts and the spirits, the wines, and we do know that France does export quite that high-end quality wine from that region. In France, and then the UK again. We've just seen the Fed's the governor of the Bank of England come out to cut interest rates, but there are a bit of worries there because inflation is way above that that 2% target. So the markets are a bit worried that eventually we're going to see the Bank of England circle back to maybe increasing interest rates, if not holding them steady for the next 3 or 4 meetings until inflation comes back under control. And then when you move into the Asian markets are doing relatively well. That's because we know that regardless of these tariff worries, Japan and the mainland China already have deals, and there's a bit of clarity in terms of the trade that is ongoing there. So there hasn't been much movement on that front. And then when you come into the Johannesburg Stock Exchange, again, what we're seeing there is a bit paradoxical, Mr. Nxumalo, because we know that South Africa is getting the 30% tariff hike, and we know that there's still issues and 30 issues to be ironed out, regarding AGOA. So, but what markets are looking into today is the beautiful earnings season, and that we're seeing the metals, more especially the miners. If you look at Impala Platinums, they are doing relatively well because the price of gold is relatively up in real terms. Historically, this is the highest we've seen in gold prices in real terms. So markets are just watching that, and I think markets are going to worry about the 30% tariff as of tomorrow going forward. But today they're just focusing on earnings, and we do expect that earnings season to keep the JSE on that 100,000 mark for the next couple of days. We've not seen any changes in the Eswatini Stock Exchange, but when you move into commodities, gold there signals the fact that we are moving into a bit of uncertain waters, because in as much as there are deals, we still have these 60 other countries that don't have deals with the US, and we don't know how they're going to respond. But the fact that the 5 major currencies, major economies in the globe already have deals with the US somehow takes away a bit of that uncertainty. Brent crude has rebounded to 67.40 barrels per dollar, given the fact that, there is a bit of uncertainty, but it's not that much crippling in the markets. And then when you move into the currencies, we can see that the Lilangeni has actually strengthened against all major currencies in today's trade. We're back at that 17.75 against the dollar, and we're getting back on that 20.71 against the euro, and back on that 8.31 against the Japanese yen. So this is driven relatively largely by the stability within the government of national unity and those budget votes being passed, and also the fact that we've seen the likes of Fikile Mbalula and quite a number of people come out to state that they are going to continue having these talks, and the relative weakness of the dollar across the board. But it's been a beautiful day in the regional stock markets, and also the currency is doing very, very well, Mr. Nxumalo. Thank you.
Thank you, Sanele. Very good afternoon, rest of the afternoon for you. And thank you to our viewers as well for staying with us here on ERS Tax Talk. This has been the Thursday edition of Market View, proudly brought to you by the Eswatini Revenue Service. If you've just joined us, you can still rewind on YouTube. We do have the stream there that is going to be left there for you to re-enjoy. Have a good afternoon. Bye-bye.